Good morning, everybody. It's Bobby Nahum here with AMAC Real Estate Company. Hope everybody's having a fantastic week this week and a great month so far here in July. Just wanted to give you guys a market update on what we saw in the real estate market here in June in Tallahassee. Last time I spoke to you guys was for the May local real estate market update. So luckily we've had some pretty good improvements in the month of June compared to the month of May in the earlier months. If you remember last time I spoke with you guys, the main issue we were having with our real estate market still was just overall activity, mainly activity of sales, which have been hit pretty hard due to the pandemic compared to levels that we saw in 2019. So we have seen some good improvement though in the month of June, and we expect those trends to continue through the rest of the year. So, but let's just go ahead and get into it. So I wanted to start out with the number of listings and what we saw with the number of homes listed for sale in our market compared to last year. So as you all know, we are in a very inventory-starved real estate market right now. The inventory of homes for sale is very low, and it continues to be low and lower than last year. So, but we did see some improvement from the month of May and June, so which is good. So, basically, what we saw with listings in the month of June is they were down still 13% from June 2019, but we did see an improvement from May to June of this year, where in May listings were down 19% from a year ago, whereas in June they were only down 13%. So the improvement that we saw from May to June was a 14.3% increase in the number of homes listed for sale. So that's good news. I'd say overall the main challenge that we have in our market right now is just not enough homes for sale. The buyers are out there looking, but we just don't have the amount of homes available to meet the demand from buyers. So, and buyer demand is strong. So that's what we're going to get into now. So sales, if you remember in May, sales were down, way down. Sales were down about 27% from a year ago. So we saw a big improvement. So in June, we were still down from last year, but we were only down by 7%. As opposed to 27% the month earlier in May. So the month-to-month improvement we saw from May to June, sales were up 24.8% in June compared to May. So that's a big jump from the month of May to June. That's great news. So it just seems like people are, there was a delay in the spring of home sales where people were buying a home off. It seems like now what's going on is that the people that had put off buying are now jumping back into the market. So if you are thinking about selling your home, this is great news because you got a lot of home buyers out there who need a home and want to find a home. So if you were one of those people that wanted to sell your home or had put it off because of what's going on with the pandemic, you may want to reconsider and put your house on the market because there's a lot of people out there looking for homes right now. So home prices. So basically, throughout this pandemic, all throughout the spring, even though activity has been down, prices, year-to-year prices were up all spring. We saw ranges of 8 to 10% depending on the month, but the year-to-year home increases were up usually around 8 to 10% every month this spring. So we did see a little bit of a decrease in home prices. So home prices were pretty much flat year to year in the month of June. So they were actually down around $600, which is a tiny amount, about less than 0.5% decrease in prices from last year. So from May, I think the average price went down from about $248 roughly to about $244 from May to June. So, but it's still prices are high. But anyway, I did feel like that was an interesting metric though, because demand jumped up so much, and prices instead of prices staying at 8% or 10% year-to-year increase like we saw in the previous months this year, the home prices were flat. So I want to figure out maybe why that is. So I looked into a little bit further, and I looked into what prices are doing in each quadrant of the county to see if we can kind of see what's going on in more detail. So what I found out basically was that in the northeast and the southeast part of town, home prices were down, while in the northwest and southwest parts of town, home prices were up big. So specifically in the northeast, we had a year-to-year decrease in June of 3% in home prices. In the southeast, we had a year-to-year decrease of 8% in June. So whereas in the northwest, we had a 16% increase in home prices year-to-year, in the southwest part of town, we had a 15% increase year-to-year. So the northeast and the southeast parts of town are generally the most expensive parts of the county. The northeast, it's the whole Clarn area, Summerbrook, Ox Bottom, all the way out to the Buck Lake area and stuff. That's the north, and everything in between, that's northeast. So in the southeast, you got Southwood. So that's a lot of the sales in the southeast are out in Southwood, which is a high price point. So my thought is that prices have gotten so high in those two parts of the county that maybe we've seen kind of just a price correction or a cool down of prices, and that's why we have not seen an increase in prices in June. And whereas in the southwest and northwest parts of the county, those areas are still very affordable. So there's still high demand, and prices are still going up in those, or prices did go up in those parts of the county. So that's my assessment. So but I would expect the remainder of the year we'll kind of see the same trend. Either home prices year to year will be flat or maybe going up just a very small amount. I don't think we'll see any major kind of decreases in home prices. There's just too much demand and too little supply to support that. So the next thing I want to talk about is the sale price to list price ratio. So again, talk about this a lot. The sale price to list price ratio is how much a home sells for compared to what its listing price is. So we were at 98.62% sale price to list price ratio in June. So on average, homes were selling for 98.62% of the asking price. That's just about the same as last year in June, just up a tiny bit, up 0.04% from last year. So about the same. Again, this is an indicator that we are in a strong seller's market. So the next thing is average days on the market. So again, in June, average days on the market compared to June of 2019 was about the same, just up 1 day. It went up from 58 days on average that it took a home to sell to 59 days this year in June. So still very, very low. I mean, it's still a pretty low number, pretty indicative that we are in a seller's market. So, and keep in mind, that's an average. So if your house is priced well and it shows very well, chances are your house will probably sell within 2 weeks. That's just the market we're in right now, especially if you're in that $350 and under price range. So all right, so the next thing I want to talk about is the sales absorption rate. So again, the sales absorption rate is a metric that they use to basically gauge the strength of the market. It looks at both buyer demand of homes and the available supply of homes to gauge how strong the market is. So specifically, the sales absorption rate, what it measures is how long would it take to sell all the existing inventory that's on the market at the current rate of demand. So just to give you guys kind of an idea of what would be considered a normal balanced market, where you kind of have a equal supply of demand and equal supply of homes available for sale, would be about 6 months. So on average, it should take about 6 months to sell all the existing inventory in what's called a balanced market. So in June of this year, we had a sales absorption rate of 3.96 months. So that's well below what would be considered the average, which means that we're in a seller's market. So on average, the existing demand, it would take only 3.96 months to sell all the existing inventory on our market. So anything below 5 or 6 months is considered a seller's market. Anything above 6 or 7 months is considered a buyer's market. So we're in a pretty strong seller's market right now. And so last year in June, the sales absorption rate was 4.24 months. So we were in a seller's market last year, but now we're in even more of a seller's market. And the reason for the change, I think, is because of the low supply of inventory and the sharp increase in demand that we saw in June. So that's the reason that the sales absorption rate went down in June. So anyway, again, that's great news for sellers. If you're looking to sell your home, that means that you're gonna not have a hard time getting your home sold, because the inventory is so low and the demand is so high, and the sales absorption rate just reflects that. So but anyway, so basically there's definitely some reason to be optimistic. It seems like that the market is coming back, and it's trending back to where it was prior to COVID-19. Back earlier this year, when sales were looking to be reach record highs and prices reach record highs and all that. So I think what we're going to see in the remainder of the year is we're going to see basically continuation of these trends. I think the numbers are going to gradually get back to the levels we were seeing in 2019. So, and I think probably by the fall we'll see probably a similar numbers in the fall of 2020 compared to the fall of 2019. And by the spring of 2021, I think that we should be back to a very strong, robust, healthy real estate market if everything continues the way it's continuing anyway. So anyway, I hope you guys enjoyed this video. If y'all have any questions about anything, feel free to email me, call me, text me, or message me on Facebook. And if you would, please like my YouTube channel, Bobby Nahum Real Estate, and comment and share if you'd like to. I'd appreciate that. And look forward to talking to you guys next time, and we'll talk to you then. Thanks.